Like the Steelers-Browns game going from this to this in a matter of 10 minutes. The impact of the ETF options on the market will shock you. With the balance of Bitcoin on exchanges hitting all-time lows, the supply shock is real. Bitcoin is on the cusp of its best month ever, and the ETFs have a huge role to play in that, as they just surpassed $100 billion in assets in the US. The Bitcoin ETFs unlocked huge investor demand when they launched in January, and a whole new feeding frenzy began Wednesday when ETF options were unlocked onto the market. Day one saw almost $2 billion in inflows as Bitcoin bulls stampeded into the trade, with calls outpacing puts at a ratio of 4-to-1. And someone believes Bitcoin's price is going to hit $180K before Christmas? Is Santa coming bearing Bitcoin this year? Let's find out.
So the price of Bitcoin near an all-time high, getting closer now to the $94,000 level. And this happening as ETF options going live, giving investors a new way to hedge their exposure. Kenzie Segalis is here, joins us with more this morning. Good morning.
Hey, good morning, Andrew.
So what's going on?
Is what U.S. crypto investors have been waiting for. On Tuesday, the Nasdaq listed options on BlackRock's $44 billion spot Bitcoin ETF. Now, day one of trading showed that more than 80% of options volume were call orders to buy Bitcoin, meaning that investors are betting that the token is poised for even more gains. And this is just the first of the U.S.-based asset issuers to offer options. The other 10 providers will soon follow suit, with several more slated to list on the New York Stock Exchange later today.
With ETF options, you can now buy leaps, spreads, covered calls, protected puts, and all of this is based directly on Bitcoin. This is a huge deal because traditional finance can now tap into Bitcoin. This opens up massive utility for Bitcoin and gives people way more channels to invest in it. But onto the ETF options. 1.9 billion is unheard of on day one for ETF options launches. For context, according to Eric Balchunas, BITO, or the futures option in Bitcoin, only had $363 million for around 4 years. All of this is with a contract limit position of 25,000 contracts. The market is insanely bullish on ETFs. In fact, of the 354,000 contracts purchased on the first day, 82% of them were calls, and just 18% of them were puts. This is why people like Kevin O'Leary said that Bitcoin is going to blow past 100K before the holidays.
Bitcoin is going to hit $100,000 long before the holiday, I think. It's so close, and there's no resistance here. This is the crypto of choice for financial institutions and sovereign wealth. They don't care about anything else, just Bitcoin. And so the aspect of mining it gets more complex. Big debate about the electricity needed to do this. But at the same time, it's an alternative asset here to stay.
Weren't you over there in Qatar? There was something to do with a crypto conference over there. You had something to do with it?
Yes, I was there. We still do
was
not.
That the springboard?
Well, the truth is, sovereign wealth has still yet to get involved. People keep talking as if they are, not yet. But when they come on, this will go and go and go and go because they're agnostic to the price. They're going to hold it for 10 years.
But here's the crazy part. Some people believe that the price will be almost double of that. When looking at the largest volumes of trades that occurred on day one, there's a massive volume of call options with a $100 strike price. For context, that means that they believe that Bitcoin's price will be about $180,000 when that call option expires on December 24th. This is absolutely insane. This is just one data point, but it shows you that the same people that were insanely bullish on spot Bitcoin ETFs are now entering this ETF options market. Imagine the kind of risk that we're going to see out there. I mean, one of the largest insurers in the world just bought 25% of the convertible notes of MicroStrategy's offering. All of the same players who have dominated traditional finance are now coming into Bitcoin, and they're building products on Bitcoin, like this new battery finance lending option that was announced on CNBC just this morning.
And I'm really excited to announce today on Squawk Box this loan that we've just completed. We combined a seasoned multifamily asset in Philadelphia, about 50 meters away from the first bank of the United States, the one that Alexander Hamilton started. We combined that asset with around 20 Bitcoin, and we provided a loan to refinance the existing mortgage on the property, to provide the asset sponsor some funding for capital improvements, and with the remainder to buy the 20 Bitcoin.
Back to the ETF options for a bit. I'll be interested to see how much diversity there is in the market, or will it all just be dominated by IBIT, like it has for the spot Bitcoin ETFs? IBIT had about 98% of the overall volume of ETF options purchased through the first few days. Jeff Park and James Seifert expect that to spread out over the next couple days because of the $25,000 contract limit that you can buy of any one option. This means that if people want more exposure, they're going to have to go and buy other products, which means that IBIT might not dominate all of the flows. But that's to be determined. This is just the beginning. More and more products are going to come online. Products that do things like the new Calamos product that they just filed for, which will limit your Bitcoin downside risk to just 20%. And although this will limit the upside potential of Bitcoin, this gives big investors, mainly institutions, an opportunity to have a stable rate of return that they can sort of rely on when they get into Bitcoin.
Supply versus like traditional commodities. If a traditional commodity like, oil or I don't know, copper or even gold, when price rises significantly, what you get is that, miners that weren't profitable at a previous price are now profitable at that price. So then you have an increase in supply, and that mean reverts price in a way. But what's unique about Bitcoin is that due to like the difficulty adjustment, et cetera, is that when price increases, you don't see that same increase in supply. The supply is constant, and the difficulty adjustment basically keeps that constant. So what I'm trying to understand here is that, okay, typically in a commodity, if we just got a huge up move and we see that volatility smile occur, it'll likely mean revert because of that dynamic where supply will come on.
But I want to leave us with the two most important points to know about the ETF options and why they are super bullish for Bitcoin's price. Number one, Bitcoin supply is fixed. As these assets flow into Bitcoin, like the $1 billion of inflows that we saw yesterday, Bitcoin remains a fixed supply asset. On November 21st, there were 10,670 Bitcoin bought through ETFs, but there were only 450 mined. Which leads me to a good point to recognize our sponsor, the Bitcoin Way. Because Bitcoin has unlimited demand for capital flowing into it, and it has a fixed supply, it means that the price is going to go up forever, Laura.
It's going up forever, Laura.
And if the price continues to go up, well, the amount of attention that you should pay to securing your Bitcoin should also go up. Work with a cybersecurity expert from the Bitcoin Way. They're going to help you learn about self-custody, privacy, and taking care of things like seed phrases so that you can actually protect the Bitcoin that you worked hard to save into. Schedule a free consultation with their team today at thebitcoinway.com. When looking at old cup and handle patterns, it looks like Bitcoin's price could reach $110,000 very quickly. And it's because of the second fact of why ETF options are so bullish for Bitcoin's price. In the trading land, there's this term called the volatility smile. And in Bitcoin, it's almost symmetric to the downside as it is the upside. Listen to Jeff Park explains why this is so important when it talks about Bitcoin's price ripping and the value that these ETF options will have on that upward volatility.
Folks who have been trading options will know that there is a phenomenon called a volatility skew, which is that downside protection tends to be a little bit more expensive than the symmetric contract to participate towards the upside, meaning humans generally want protection and insurance costs a premium, and they're willing to pay a little bit above what the implied volatility at fair value should be. That also makes sense because most financial assets actually crash down rather than have events where they go up astronomically unless there's a specific catalyst like a merger or a drug discovery or something like that. Bitcoin is unique because it actually has what is called a volatility smile. And it means that the call options can be just as expensive as the put options. And that really means melt-ups can be just as likely.
This creates the rocket effect on Bitcoin's price. As the price rises, the options value increase, and the shorts have to buy that Bitcoin to cover their positions, which creates a large price surge, and the cycle repeats. The rocket gets more powerful as it goes higher in the air, even with less fuel. And if we break through this 100K sell wall, look out. We're entering a whole new phase of price discovery. And I'm not sure that anybody's ready for it. Before we wrap, I wanted to give you a heads up about the Bitcoin event of the year, BitBlockBoom, happening in Dallas, Texas from April 3rd through April 6th. I'll be speaking on the main stage with Bitcoin OGs like Bob Burnett, like Guy Swan, Parker Lewis, and Marty Bent. Your ticket will get you access to Bitcoin for Beginner workshops, hands-on workshops to help you level up your education in Bitcoin, mining workshops if you're interested in that, and exclusive parties like a casino night. Get $100 off your ticket by visiting BitBlockBoom.com and entering the promo code BBB21. This is Dante Cook with Bitcoin Simply. Happy stacking.